Okay, hello everyone. Good evening. I hope your weekend has been going good so far and your trade has improved and all of you has made a good profit. Okay, I am here, Anis, today to share with you not so much of market updates, okay, because everybody knows that US market is obviously going up because the election is coming in November. Dollar is somehow weakening slightly. Okay, I think they have collected that much, and then we have data US improving, so that in a way helps uh, to boost the sentiment feels on trading the market more. Okay, at the same time that does help increase additional funds to come in. Okay, so yeah, I'm not going to touch that, but what I would like to share with you guys is that, okay, I'm going to share my screen. Hang on. Okay, I want to share with you first trading with chart pattern. Okay, this is to make it easier. Okay, a little bit to gauge what are the pattern you're looking at on whatever you're looking at, whether it's index, indices, or your forex pairs. Anything at all. Okay, but before we go there, returning the lost capital is harder than it seems. Truthfully, okay. For example, now this is an example. You look at the first row of 5,000 ringgit trades. Okay, when you lose 25%, okay, so your new balance is 3,750. Now the loss of that 1,050, you need to work that to 35% to actually to cover those 25% loss. Okay, now look at the second row. Okay, if you lose 50%, that new balance has to work 100% so that you can recover your 50% loss. Okay, look at the last row, 75% loss equivalent to working that new balance of 300% return. Silly, isn't it? Okay, so I want you to be stringent with your capital. Okay, in bahasa we call it kedekut. Okay, so yeah, keep that in mind. Okay, chart pattern. We have a continuation and we also have a reversal pattern. Okay, so the characteristic of the chart patterns, the first one, what you want to look at is the baseline. Okay, number two is the neckline because neckline will determine the breakout level. Okay, give you the indication. The trend, which leading the pattern, whether it's uptrend or whether it's downtrend, whether it's going to continue or whether it's going to reverse the trend. Okay, and then next we have the peak and the trough. Okay, which is the high and the low formation. Okay, some people call it the peak and the trough, so it's easier. The high and low, that is fine. Okay, and then the angle. Okay, those lines connecting the low or high. Okay, and then the last one is the volume within. Okay, we don't have much time. Okay, it's only 20 minutes, so I'm gonna just quickly run through. Okay, this is a triangle. Okay, how you're going to treat the triangles, ascending, descending, symmetrical. Okay, the best thing is that, do you know how do you calculate the target with chart pattern? Okay, it's very easy. Okay, hang on, hang on. I'm gonna share another screen. Let me quickly. Okay, so I'm gonna pen. Okay, so in order to calculate your target price based on the chart pattern, is that the base. Okay, the base is this area. Okay, so this area is what you call the base. Okay, so the height of the base will be the target. Okay, so if this is x, this is x as well. Okay, so if this is x, sorry, if this is x, okay, since triangle is a continuation, so it will go up as much as the height of x, the height of the base. Okay, now let's look at another one. Okay, another sample of triangle. This is the base. And notice how it goes just as much. Amazing, isn't it? Okay, on the left now you're looking at the pennant, and on the right you're looking at a flag. Okay, so for a flag, for you to calculate the target price, okay, what you want to identify is first the flag pole. Okay, this is the flag pole. Okay, so if the flag pole is x, okay, and the target price will also be x. Okay, the base. Okay, so it will goes up as much as high as the base. Okay, now next let's look at this is another flag. Okay, there you go, you see the base, it goes up just as much. Okay, this is a pennant sample. Okay, this is a rectangle. Okay, the same, what is the base? Okay, if it break above, that it will goes up just as much. Okay, if it the price break at the bottom, then it will go just as much. Okay, so yeah, rectangle. Okay, now let's look at the cup and handle. Okay, the cup and handle is basically, okay, the height of this. Okay, upon breakup, it will goes as much. Okay, that is how you measure the x to x pattern. Okay, next, this is read, okay, the baseline, the neckline, okay, how to read the peak and trough, okay, the angle, volume within is high upon breakout. Okay, this is a sample of rounding bottom. Okay, the height of this, and it goes there, x, x. Okay, that's how you calculate your target price for rounding bottom. Okay, now head and shoulder. Okay, head and shoulder. Okay, the one on the left is a head and shoulder, and the one on the right is an inverted head and shoulder. Okay, inverted head and shoulder usually happens at the bottom of the pattern. Okay, and the top on the left is usually what you found at the top of your charts. Okay, or the trend. It's usually I explained before this the trend structure of making higher highs. Okay, this is an indication of where The trend fails, the trend structure fails to make a higher high. Okay, so this is a formation of a very strong reversal. Okay, so once you see this, okay, what you want to do is from the head to the neckline, okay, the black line across is the neckline. Okay, the distance between the head to the neckline, okay, we call it X. So the target price will be down X as well. Okay, same goes for inverted. Okay, you measure what is the height to the head, and that's the height it will go. Okay, X to X. That's how you use that pattern as your target. Okay, you see this is a bigger head and shoulder, yeah, a bigger time frame. Okay, how about double bottom? On the left is double bottom, and on the right is triple bottom. Okay, triple bottom would be a more significant pattern than the double bottom. Okay, because why? Triple bottom obviously take a longer time to complete. Okay, so now pay attention to the left. Okay, so the black line is the neckline. Okay, so what you do, you measure the height from the bottom, okay, to the neckline. Okay, and that will be your target, X to X. Okay, same goes as triple bottom. Okay, you measure the height, okay, X, so that will be the X. Okay, that's how you use the double and triple bottom chart pattern. Okay, this is example on the chart. Okay, this is a double bottom. Okay, falling wedge. Okay, falling wedge. Again, okay, this is a baseline, the base area. Okay, so upon breakout, okay, the base height X, that will be your target as well, X to X. Okay, falling wedge take a longer time to complete. Okay, so you keep in mind, you may see this on a daily chart or on a hourly chart, but it will take more candles. Okay, unlike pennant and flag, there were obviously a very short pattern, so it takes only few candles to complete the pattern. Okay, so the baseline, the neckline, okay, and the trend. Okay, this is a rising wedge. Okay, if you see a rising wedge, because it's a reversal, so obviously price will fall down. Okay, so the height of the baseline, okay, will be the height of its target price. Okay, X to X. Okay, one thing that you have to keep in mind, okay, usually chart pattern, how long do we want to gauge whether it's completed or not, okay, it needs to break out from the neckline, okay, only then it is considered complete. As long as it stays in between the line, okay, the baseline and as well as the neckline, okay, that the pattern is not complete, it is still in the making. Okay, so once it's complete, it break out from the neckline. Okay, that is considered, only then you take it as the completed pattern. Okay, once you have a completed pattern, then you can start measuring the target. Okay, and usually breakout happens after 2/3 of the pattern is filled. Okay, when you mark the area, okay, all the way when it's joining together, okay, you can get, okay, so within that 2/3 of the pattern, the breakout will hardly happen. Okay, if the pattern is just starting, 1/3, so the price staying in the area is still high. Okay, next. Ah, because it's the end of the slide. Okay, so how does that? Okay, I really, really hope that helps you to improve. Okay, it's easier. You can now open the chart. Okay, any index or whatever, any chart pattern, and mark it, and you can gauge the area or the direction, whether it's uptrend or downtrend, is going for. Isn't it easy? Okay, so other than that, okay, a little bit of market outlook for Malaysia equities. Yeah. Okay, we are currently in the third quarter, which is usually the most rate quarters for almost 9 years now, continuously, consecutively. Okay, so most of my traders have shifted into trading safely. Okay, we go down to fund sizing by lowering it, trading not more than 50% or 20% for that matter, So the next quarter, quarter four, joining into quarter one is always the best performance for index KLCI. Okay, for Asian market as well, now you can see a lot of international funds coming in because of weakening US dollar. So current company has who has a direct deal with US will definitely benefits to that. Okay. Okay. Other than that, I think that's all for me now. Okay. So stay tuned, and I'll see you next time.